What is an income statement? Presented by WallStreetSurvivor.com. An income statement shows the financial performance of a company for a given time period. It shows a company's revenue and costs and is therefore a pretty good indication of the strength of the company. Income statements are also called profit and loss or P&L statements or revenue and expense statements. Income statements are prepared as a part of a company's financials. All public companies are required to submit them quarterly, regulated by the SEC. So let's look at a simple income statement in practice. Here's Mary. Mary owns her own successful flower shop, Petals, and has begun filing her income statements for the quarter. Last quarter, Mary sold $500,000 worth of flowers. This is her top line revenue. Revenue is also sometimes called sales. Next, Mary needs to add up all the costs directly associated with cultivating her flowers. These costs include things like seeds, earth, fertilizer, and electricity. These are added together and are collectively known as costs of goods sold, or COGS. Revenue minus COGS is known as gross income. Think of this as money made from both growing and selling flowers. After that, Mary adds up her non-direct costs. These are costs she incurs that aren't related to sales. Petals' costs included marketing, rent, and salaries to her 2 store managers. These costs are known as selling, general, and administrative costs, or SG&As, and are often thought of as the company's overhead. Gross income minus SG&As is referred to as operating income, or income earned from a company's operations. Lastly, Mary subtracts taxes from her operating income to get her net income. Mary now has a good understanding of the profit generated from Petals. Usually, income statements are a little more complex to put together and are handled by professional accountants, controllers, or CFOs, and follow the general accepted accounting principles. To learn more about income statements and other topics, head over to WallStreetSurvivor.com.